Greetings! Welcome to our e-learning module on setting up a chart of accounts, a step-by-step guide for beginners. By the end of this session, you will have a better understanding of the purpose of a general ledger, the steps to set one up, and why accurate and organized accounting is crucial to your nonprofit's success. A general ledger, or GL for short, is a comprehensive record of all financial transactions within your organization. It's the backbone of your accounting system, tracking all financial data and serving as the foundation for all financial statements. A well-maintained general ledger is essential for accurate financial reporting. It helps with budget preparation, financial planning, and analysis. It also ensures your organization meets regulatory and audit requirements and maintains compliance with generally accepted accounting principles, or GAAP. GAAP, or Generally Accepted Accounting Principles, were established after the stock market crash of 1929 to standardize accounting practices and promote transparency and integrity. For nonprofits, GAAP is not just important, it's required. Following these principles ensures your nonprofit maintains a solid reputation with donors, grant makers, government agencies, and other stakeholders. The general ledger is key to accurate financial reporting. It aids in budget preparation and long-term financial planning. Furthermore, a well-maintained GL helps nonprofits meet regulatory and audit requirements, ensuring that their finances are in good standing. The general ledger has three primary components: accounts, to categorize transactions; entries, to record individual transactions; and balances, that summarize the financial position. Accounts are further broken down into categories like assets, liabilities, equity, revenue, and expenses. A chart of accounts, or COA, is a structured list of categories used to record financial activities within the general ledger. Your COA categorizes transactions so you can keep track of all financial elements like revenues, expenses, and assets, ensuring everything is properly accounted for. The chart of accounts needs to be structured clearly, with categories organized in a way that makes financial transactions easy to record and track. Accounts should be broken down by type and grouped logically. Using alphanumeric codes is helpful for managing account categories and transactions. There are 5 account categories. Assets are what the organization owns, like cash and equipment. Liabilities represent what the organization owes, such as loans or accounts payable. Net assets reflect the difference between assets and liabilities. Income includes money coming in from donations or grants, while expenses are the costs of running the organization, like salaries and office supplies. Here is a sample chart of accounts typically used by nonprofits, showing how financial data is organized for ease of tracking and reporting. To create a chart of accounts, first define your organization's goals and requirements. Review your existing financial processes. Identify core activities and transactions. Determine reporting needs, and draft a preliminary chart of account structure. Once completed, test and refine it before final implementation. Start by understanding your organization's financial reporting needs. Meet with key stakeholders, such as the executive team, department heads, and finance staff, to identify the necessary financial reporting requirements for donors, grants, and regulatory bodies. Next, evaluate your current bookkeeping and accounting processes. Analyze any existing chart of accounts to identify gaps, inefficiencies, or redundancies. Also check if your accounting software can support a new chart of accounts effectively. Now, list the primary financial activities that need to be tracked. This includes sources of income like donations, grants, and program fees, as well as expense categories such as salaries, supplies, and rent. Make sure to include accounts for both assets and liabilities. It's essential to ensure your chart of accounts supports all necessary financial reporting. Identify reporting needs for internal management, the board of directors, donors, and regulatory bodies. Ensure that your chart of accounts allows for generating reports without requiring excessive customization. Based on the information gathered, organize your accounts into major categories like assets, liabilities, equity, income, and expenses. Subdivide these categories into specific accounts tailored to your organization's needs. Be sure to get feedback from stakeholders to fine-tune the structure. Start with assigning account codes that serve as headers for groups of accounts. For example, numbers in the 1000 range typically represent assets. Liabilities are usually in the 2000 range. Use the 3000 series of numbers to designate net assets. In the 4000 to 6000 range, assign numbers for different income categories. For expenses, use the 7000 to 9000 range. Next, create subcategories under each account to give more detail. For example, assets could be divided into checking accounts, savings accounts, investments, accounts receivable, property, equipment, and petty cash. When creating subcategories, group similar items together. For example, under revenue, you could have all donations in the 4000s. Such as individual contributions, corporate contributions, and grants, and all fee-for-service revenue types in the 5000s, such as program service fees, membership dues, and event income. When grouping subcategories by type, use alphanumeric codes for better tracking and analysis. For example, expenses like wages, payroll taxes, and benefits can be grouped in the 7000 range, while office supplies, rent, utilities, and travel can be grouped in the 8000 range. Always leave some space between categories to add new accounts as your organization grows and diversifies its financial activities. Use comprehensive accounting software to better leverage your chart of accounts to create reports. Circling back to the sample chart of accounts to view the outcome of this process. Keep in mind that your organization is unique and your chart of accounts should reflect this. It's also important not to get too specific with your accounts and to delete or archive unused accounts from the chart. We also recommend asking your accountant to look over your chart of accounts prior to implementation. Depending on your accounting software, you can further refine your general ledger with additional segments, also known as dimensions, such as department, funder, program, restrictions, or location codes. This allows for more detailed tracking of transactions and reporting of financial activities. Here is a sample chart of accounts segmented using account codes to group expenses by function, program, administration, and fundraising. As your organization grows and becomes more complex, reporting might require additional segmentation. Here is a sample chart of accounts further segmented using categories or dimensions such as departments, locations, and funders. Before fully implementing your new chart of accounts, it is crucial to ensure that it functions effectively. Begin by inputting sample data and generating reports to test the structure. This will help you identify any potential issues. Based on your testing results and feedback from key stakeholders, make adjustments to the account categories and descriptions as necessary. Once everything is refined and functioning smoothly, you can finalize the chart of accounts and prepare for its full implementation within your organization. Once you've finalized your chart of accounts, integrate it into your accounting system. conduct training sessions for bookkeeping, finance staff, and budget managers to ensure everyone knows how to use the system effectively. Ongoing support will ensure smooth adoption. The General Ledger records all your organization's financial activities, while the Chart of Accounts ensures detailed and compliant reporting. Together, they provide a solid foundation for clear, organized, and effective financial management. Thank you all for viewing this e-learning module. Have a wonderful day.